What's up everyone? Welcome back, and if it's your first time here, I hope you stick around. So today we're going to go through the markets and see what price action is telling us, see what the key levels are, and if there's any bullish or bearish edge on the charts. Today we had a lot of volatility with this being an election day. We have CPI data on Thursday, we have crypto getting wrecked, we have FTT getting wrecked, FTX news, so a lot going on today. So let's get into it. So something I wanted to bring to your guys' attention was the fractal we have from 2006 to 2009, the VIX you'll see in blue, versus the VIX as it is today in 2022 in white. You'll see kind of where you are. Is there more downside to come for the VIX? Probably, just based on technicals. But if you're following this fractal, you have a little bit more downside to go, and after that immediately spiked back up. And you can see here at the seasonalities, about middle December the VIX bottomed out and just pumped to the upside, wrecking everything in its path. So I thought that was fun. I know it's just floating around on Twitter somewhere, so I just kind of want to bring this to your guys' attention and just make you aware of it. On Tuesday, the S&P finished up 0.56%, Nasdaq up 0.49%, Russell was down 0.05%, basically flat, and the Dow was up about 1%. So looking at the S&P today, what did we do? We ended up with back above this level that we had a breakout on yesterday, confirmation follow through on today, back above this key level of resistance prior, which didn't hold as support. Now you're back above it, kind of a indecision candle, but higher high, higher low individual candlesticks. You have positive momentum still beginning to build again. RSI's in your above neutral and approaching the bullish control zone, and you had significant volume on your green candle today. Looking at the S&P on the 4-hour though, you are back still above this level that you desperately need to be back above if you want to be bullish. However, you are still under the 200 simple moving average. But what you're doing is retesting this level as now confirmation support with bullish divergence forming on your MACD and your RSI in the bullish control zone. Let's look for some follow through tomorrow. They're talking about if we're having a red wave, you're going to see these levels hold and a rally ensue. But we'll have to see what the election brings, and then also we have that important data on Thursday with the CPI. Taking a look at the Dow Jones. We thought potentially we had some bearish divergence forming, but we started to immediately build positive momentum on your MACD and start pointing back up into the bullish control zone on your RSI with a breakout back above the 200 moving average and a breakout above this supply zone. The last thing you need to do is get back into this level of inflection and start to make this as support. Get back above these previous highs here from August. You haven't done that yet. Price did start to break out, and you did confirm as of today what was support and resistance prior is now resistance for the time being. Let's see what the follow through is tomorrow at this level. Taking a look at the Dow on the 4-hour, you actually back tested what was your supply line. You are still below the level of inflection, but also you're making some hidden bullish divergence from your one low to your higher low with the same levels of negative momentum on your MACD. However, you are a little bit overbought on your RSI, so let's see, maybe we find some consolidation below this key level of inflection like we did here and resume to the upside, considering we are in a slight short-term bullish trend being back above the 200 moving average on the 4-hour. Let's see what the next couple of days bring, but keep in mind we have a lot of important data coming. Looking at the Russell on the daily, we still have this idea of some bearish divergence on your MACD. You're still above neutral on your RSI, but you possibly are putting in a third lower high up here. But if you're looking at the individual candle, kind of a spinning top. You did not bearishly engulf the previous trading day, so it's not a bearish candle, it's just a red candle, which you had a lot of volatility throughout the day. You were pumping throughout the day, and then the crypto news hit, crypto sold off. It impacted stocks slightly, but not to the effect that one would think there would be a bigger impact on the stock market. So cautiously optimistic on your lower sorry, your higher low. Looking at the 4-hour on the Russell, what did you do? You back tested once, twice on the 4-hour, the 200 moving average, and is held as support. I'd look for some follow through to the upside. Tomorrow, you have hidden bullish divergence from your previous low to your higher low. With your higher levels of negative momentum, you have your low with your same low on a higher low on price. Still in the neutral zone. I like to see this back into the bullish control zone, but doing the right things to stay cautiously optimistic. Not bullish just yet. Let's look for some follow through. Looking at the Nasdaq on the daily time frame, we are now holding this level as support, where we did have this bearish divergence actually play out, but nothing significant. We did talk about how you were holding the heart line of this downsloping parallel channel, acted as support, saw a slight rally back above the level of inflection, kind of this indecision candle, but still back above these key levels you desperately need to be back above. Holding for now. Again, we got a lot of data coming out. We'll see what happens for the rest of the week. You are still below neutral on your RSI. 4-hour also implying some hidden bullish divergence from your one low to your higher low, with higher levels of negative momentum than your previous levels of negative momentum. Still below neutral on your 4-hour, so we'll have to see if this ushers in any type of rally from here, since you are now holding this level. Again, we'll have to see if the red wave does come through from election day, what CPI data brings, so a lot left to go in the week. Looking at the DXY, the dollar. So what happened? We saw significant follow through from this bearish engulfing candle, and looking at this 3 falling peaks here, if you want a measured move of this, it is from your highest high of the pattern to the second valley of the pattern, and then a break of the pattern. So if this does play out and performs relatively well, you'll probably test the 200 moving average on this if you want a full measured move. You have seen some nice follow through. Let's first stop at 107, see if we find any support or any bids come in. If not, and you break down below this with any type of candle closes, you will look to see the next level, which would be confluent with the 200 moving average. Negative momentum still building on your MACD, and now you are in the bearish control zone on your RSI. Taking a look at the VIX on the daily, you do have this inside trading candle, which we could. Taking a look at the VIX on the daily time frame, so you did hold this as support. You did have a really nice Marabazoo, which is you opened, never saw those prices again, and closed at the lows of the day. This is a statement candle, which would imply selling pressure to the downside. But what did you do today on the VIX? You had an inside trading candle, which could be considered a bullish harami, and you'd have to wait and see if you saw any follow through to the upside from this Japanese candlestick. If not, you could just sell off and break the lows of today's open and invalidate this candle. But if you're bullish on the VIX, that's doing the right things. But again, it's not about the candlestick itself, it's about follow through. USOIL, wow. So we couldn't break this previous high from October 10th. You thought you were back testing bullishly and holding this level as support. Unfortunately, follow through to the downside. It wasn't held. Let's see if we can put in just another higher low and maintain this trend. If you start breaking trend, you're going to want to flip to a bearish bias. Let's see if this momentum shifting structure has any more follow through for it. USOIL on the 4-hour, getting back below the neckline of where you desperately want to be back above. If you are bullish on oil, we had this bearish divergence from one high to the next high on your RSI, with significant follow through to the downside, actually in the bearish control zone, with negative momentum continuing to build on your MACD. Not what you want to see. If you do end up breaking these lows here at 87.82, look for a retest of the 200 simple moving average. All right, gold is doing things. So we actually had this triple bullish divergence on both oscillators actually starting to play out. You have broken this supply line of the downtrend, and when you run your Fibonacci tool from this discernible swing high to this swing low, which is now a confirmed bottom with 1, 2, 3 supports here, confirming your bottom and rallied right off of it, you have now done a 50% retrace of this previous swing high. Typical retraces is going to be from the 382 to the 618, so you do have a little bit more room left to go. You are building positive momentum on your MACD. You are in the bullish control zone on your RSI. Doing good things. Let's see if we can get back above these key levels and see if we get out of this downtrend and get back in this level of inflection and start to make higher highs than your previous higher high from August 12th. So silver, we've been talking about this level of accumulation where we had this strong argument of one low, higher low, higher low, with hidden bullish divergence from these higher lows, relatively same low with higher levels of negative momentum, ushered in a really nice rally. Well, what have you done? Nothing's too significant, except you are getting a candle close back above these levels here from October 4th. However, you are finding resistance at the 200 simple moving average, and you just can't quite get up there and tag 2168. Look for some follow through tomorrow, because this is a very nice bullish engulfing candle from the previous trading day, which was most likely just an indecision candle. So we'll see if we get some more follow through and we can become more cautiously optimistic on silver back above these two critical levels, which you are approaching. So I have UNG pulled up for the daily. We did have this previous head and shoulders momentum shifting structure actually play out and overperform to the downside. Now that you've hit the measured move of this structure, what have you done? It appears to be bear flagging, but just look at all of the gap ups, gaps down. I mean, have fun trading this. I mean, it's so illiquid right now. You can see you have some potential bearish divergence maturing. A little too soon to call it, but from one high to potentially your next high or lower high, you have higher levels of momentum, and not getting back above this level is going to usher in some bearish divergence. You have your RSI breaking back below neutral, possibly could be heading to the bearish control zone. We'll see. But you did find resistance at these levels, didn't quite even tag the 200. So, you know, false breakouts do have consequences. So you did break out of this bear flag to the upside, weren't able to get back above key levels, and what happened? Right back into the channel and holding the heart line of the upsloping channel. Taking a look at Tesla on the daily, you weren't able to hold 209.07, which is a historical support resistance area that you desperately needed to hold. Tesla just could not hang above these when you did have some really nice bearish divergence on your MACD, which is now having its first day of a negative impression on significantly higher volume. And you could be putting in a hammer candle, but I'd like to see what we saw on PayPal, a really nice long wick with a smaller body, implying buyers are stepping in and sellers are getting wrecked. But as it stands right now, you gap down. You did have some buyers step in. I think your hard major supports are going to be 181, and when you break 181, it's not good. You'll likely head down to another hard target around 64 pretty fast. You have a thin order book between these levels. Sure, you could call it 119 in time first, but I think your harder targets are going to be down here around 63. But again, it's level by level. Once you hit 181 and you don't hold, you're headed down to the next level of inflection, which is going to be about 119. After that, 62, 63. So taking a look at Tesla on the weekly, we knew now. Taking a look at Tesla on the weekly, we actually do have confirmation of these three falling peaks, where the breakout to the downside from your second valley, which is confirmation of this structure. Break 181, you'll likely test the 200 simple moving average, and then you have these local support resistances. Not much. Price really hasn't hit these levels and reversed here. You just have one or two touches of local support Again, I do think your harder targets are closer to the downside around 63. Taking a look at Apple, you are still continuing to build negative momentum on your MACD. You are in the bearish control zone on your RSI, and you had more higher volume than yesterday's green candle on a red candle. But however, you are still above this level of inflection of 138.02. Stay above this level long enough, you're likely to see the top of the range. But just with everything going on and the macro and cryptos getting wrecked, it's hard to see this play out. But you never know what narrative is going to push this back above. So just follow price action. If you get back below these levels, this is still a level of inflection. But if you break 134.42 with the candle close, you'll likely see the lower range around 122. So PayPal had a really great day today. We talking about on Sunday's weekly recap the potential Thor's hammer, which had some follow through to the upside, where you put in this Japanese reversal candle, had a gap up, which also could be considered a bullish abandoned baby, where selling pressure gap down, putting in the hammer, gapping up, and then having more follow through to the upside. But unfortunately, what you did, you ran into some resistance, which was confirmed as resistance once again, which was previously support. Yikes. This would have been a nice opportunity to short. You do see clear distribution from one lower high to the next. And also, we were talking about a couple days ago, if you break 82.76, you see the lower range of 72.24. You did, buyer stepped in. You did usher in a nice reaction at this level. We'll have to see if we can get back above 82.76. You do have this bearish divergence on the MACD that did play out, but negative momentum is beginning to wane. So if you want to take a shot, get a candle close back above 82.76, hold it for a day or two. You can play that with them stop marginally below 82.76 if you want to take a shot and be bullish on PayPal. The way the macro stands, I just don't know if that's going to play out or not, but you never know what narratives are going to run. You have the CPI and you have elections. Red wave comes in, you could see a nice rally from these levels. Pulling up PayPal on the 4-hour, what we were talking about in one of the swing trade videos is this right here, which is a very powerful Japanese reversal candlestick pattern. This is your tweezer bottom at a historical support resistance area, where unfortunately you had bearish convergence from your low, your lower low, your low, your lower low, but being as oversold on your RSI here at an inflection with a tweezer bottom did usher in a nice rally, which if you played your tweezer bottom here and took profits at the historical support resistance, picked up about 10% in a couple days. So fantastic. Can't complain about that. So that's why it's important to learn, what are these reversal candlestick patterns? Where is your historical key levels of inflection? Not only is it the key levels of inflection, it's also being cognizant of when you have a bullish argument and you say, I have an argument, I've looked at the different variables, I'm bullish on this asset, I want to take a shot for these reasons. As soon as you take your position, it's you set your stop. You have stop losses in place to protect yourself. Imagine you reverse and validate this tweezer bottom by breaking back below 72.24. You're going back down even further to death. So that's why you want to have your stop losses in place. And we'll take a look at Bitcoin a little bit later to really solidify why stop losses are important. Taking a look at Amazon. So you're just kind of in between this range where it's been straight up, straight down, straight up, straight down, straight up, straight down. Breaking these key level of 101.80. What have you historically done? 100% of the time. Straight down, back down to 81.45. RSI is a little oversold. Your negative momentum is beginning to wane, but you are having decreasing volume on your selling pressure, so you could find some local where you found and pivoted previously in this area. So this is a lot of consolidation and chop here. You could rally slightly, maybe even come back and back test because you haven't back tested this as resistance yet. You felt it as support, support, support. Last time you back tested this area was July 2019. So if your buyers are going to step in here, kind of a spinning top, we'll have to see if you follow through to the downside, or if, again, we're speaking about elections, you have this red wave coming in and you do start to rally and bids are coming in. Why not see the top of the range? This would be a great area to short. And anything back above 101.80, watch out for 108.88. Get back above there, you know what we're talking about. Straight up, straight down. So looking at Google on the daily, you have held this area of inflection. We were talking about last week that it's not about the initial bearish breakdown. What is it about? Yes, it's about follow through, right? So the follow through immediately after your bearish breakdown was buyers push prices back into this level of inflection where it's been support, 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 resistance is now support again. And what did you do off these levels? You gapped up and you are now butting up against the global 618 with kind of this really nice indecision candle on lower volume. But the global 618 is from your COVID crash low to your buying climax all-time high. You've retraced 618, so 62% off from your all-time high, and you're seeing price react here, just not able to get back above it just yet, just with an indecision candle. So we'll see what kind of narratives start to come out, and if you do bullishly engulf the candle on the next following day, or you come back down to fill these gaps, retest this level as support. So looking at everybody's favorite asset, Bitcoin, big yikes today. So what happened? Following the trend up here is when you would want to be stopped out if you were playing this bullish shark. Unfortunately, massive liquidation today, where it was ushered in by, you have bearish divergence on your MACD, bearish divergence on your RSI, with significant follow through on very high volume selling. But what are you doing right now? You weren't able to break below, as of yet, with the candle close below this trend and below these very local lows. That below here, you're headed probably down to straight 14.8, which you'll notice is the next level of from November 2020, where you sprung, back test, held as support, and rallied to the next level. That's what I'll be looking for. If you break below these candle closes that have been held by buyers and defended, and if you break these wicks at 17.6, you're likely to see the next level. Very bad, very bearish. You are back below 19,650, which we were talking about. You could be cautiously optimistic above this level of inflection. Unfortunately, you melted right through like butter. You are holding this supply line as support for the moment, but you do have a couple hours left in the day for Bitcoin. So Bitcoin on the 4 hour, you do have buyers stepping in here. I don't think this has bottomed out yet. You can just tell by the volume. I think you're just having a technical bounce. Your negative momentum still building on the MACD. You are oversold on your RSI. So does this make sense for bids to be placed? Yes. Is it the bottom? Most likely not. Could you come back up here and retest this as resistance and confirm that it's resistance again? Absolutely. And then head back down, sure. But you have a lot of crypto news going on. FTX is being bought by Binance. You have FTT getting wrecked 80% down today. So this is why when you do take positions, the next step after buying is setting your stop loss. So something I really wanted to bring to your attention on Bitcoin's 4 hour was this 3 falling methods Japanese reversal candlestick pattern. I have it highlighted here, and after you had your initial pattern plus your follow through, prices are down. At their peak, they were down 15% after you confirm that bearish pattern. So kind of adding these tools to your tool belt so you can find them and identify them and take a potential short based on the pattern itself, would have been very profitable today. So just kind of keeping these things in mind as we're looking at individual candles and trying to recognize different patterns. So Bitcoin Cash, something I was really excited about. Unfortunately, in these market conditions, it's hard for them to play out, if they play out at all, in this significant bear trend. It's always important to remember, you could rally even up to the next level of $262 on Bitcoin Cash, and guess what? You're still in a bear trend. The macro is just super bearish, but look at where you are. It's a reasonable argument from previous highs to all-time lows from December 18th. What you're doing at these lows, you're putting in a bullish harmonic in a falling wedge, holding historical support. Sure, the macro's trash, and guess what happened? False bullish breakouts have consequences. You weren't able to hold this level, it was a false breakout, and guess what? You confirm your supply lane again as resistance, and the following day, dump. And you also broke these key levels of inflection. You are finding some bids at the bottom of this demand line for your falling wedge, but it's just your first level of negative momentum being printed in the bearish control zone on your RSI. Very bad, very, very bad. We'll have to see what ushers in next, but a lot of these arguments, unfortunately, you see, you had your first reaction, you're not coming back for a type 2, and you didn't overperform on your first reaction, unfortunately, and you couldn't even find a real breakout from your falling wedge. Very bad. So I still have this argument for Ethereum to hit its 886 from its previous swing low from Friday, June 17th of 2022. You do have this potential bullish bat with a pattern completion zone around $1,000. Also, it's going to be a psychological support resistance. So currently you're just putting in lower highs, and this potential harmonic isn't invalidated unless you make a higher high than your C point. So this is just one complex wave structure, which could even come out to here in time. It just depends. But as it stands, you're probably headed down to the 886 if you start breaking these key levels. We are currently finding bids here where it's been defended September, and it was resistance in June. So we'll have to see what happens over the next couple of days. You have this bearish divergence on your MACD and your RSI. First impression of negative momentum printed, and you are now in the bearish control zone on your RSI. All right, so thank you so much, everybody, for going through the markets with me. If there's something I missed or something you want to see added to the show, please let me know in the comments below. If you like what you saw, please hit that like, that bell, that sub. You'll know when I post a new video or if I go live. And until next time, thank you so much.